Hey everybody, I got a little bit of feedback that people would like to see my face a little bit more. since COVID, I haven't been able to get out and see everybody like I like, especially in here in and around Dallas. So I thought, I do send out these weekly market updates through email. If you're not getting those, please hit me back and either Wheeler@Xponify.com or call me or text me on the cell 214-842-9845. And I'll gladly put you on that distribution list. So what I thought I'd do today and going forward is just kind of highlight what's in those emails. And if something strikes your fancy, you want to know more about it, I encourage you to read the email. And then after you've read the email, if there's still more you want to know, please don't hesitate to reach out and give me a shout. Now, what is this not? This is not a recommendation. I'm merely saying what happened in the market last week. Some things that are going on, maybe some things that might happen in the future. But if you're looking for, particular investment advice on what's the latest hot stock, what's the latest great investment, or private venture capitalist, or hedge fund, or Bitcoin, that's not what I'm doing, right? That's something that I'm happy to sit down with you one-on-one, and we can go over those things in terms of what your situation is, what your risk profile is, what your goals are. What you're trying to accomplish and in terms of what you have in your investments, and then we can go from there. So I just don't give out blanket recommendations. So I apologize in advance. So if you're looking to know, where to stick $1,000 and make 20%, that's not what stop watching now because you're just gonna get mad later. But if you want to know long-term investment strategies, things to consider in that strategy, then that's what these things are provided. So I'll just hit a few highlights, and forgive me, I had notes here I don't need to read through. I can't memorize everything, but really one thing to remember is that the Dow Jones, a highlight is it almost hit the 30,000 mark, which is great. For those of you who don't remember, pre-COVID, I think we were sitting around 26, 28, something like that, and then it dropped right after COVID, right? So in April, I think the dire straits was around, the lowest, it was around 18,500. Everybody was freaking out. But now, see, if those of you who listen to me, right, we're right back up close to 30,000, which is great. Now, that's tempered, obviously, with some things. Vaccination news that came out last week, that's great. That helped. But that's tempered with the fact that cases rose, right? The cases are on the rise. People are afraid the schools are going to shut down. Why does school shutting down matter in terms of economics? Well, quite simply, if schools shut down, people have to do something with those kids. You can't just leave them. I got 25-year-old daughters at home. I can't just let them run around on their own. So I have to stay home with them. So I have to stop working. So that's what most people have to do. They have to stop working. That job's not getting done. And then that company suffers, and then the economy suffers, and that's the trickle effect. So schools being open are pretty important. So again, not arguing with the rightness or wrongness. I'm just saying that that's the effect of a school shutting down. So that's a temperament of things. One other thing is the sales of existing homes that grew for the 5th consecutive month in October. So it climbed 4.3% from September. So that's great. And what's driving that? Again, low interest rates. A lot of people are refinancing their home. A lot of people I know from personal experience were sitting on a ton of cash waiting for the sky to fall down. They had the cash and they refinanced with these low interest rates. And that's what's driving that mostly. I don't see it, people just, moving all over the place. There's some of that here in Dallas, obviously, but nationwide, I think it's more of a refinancing thing. If you look at the retail level of sales, that increased 0.3%, so that's a good sign. What else? I'm trying to think here that there were some other things. Import prices, they fell about 0.1% in October. Despite that decline, I think the import prices are up about 1%. So that's good. And then according to the latest report from the Federal Reserve, industrial production rose 1.1% in October. That's great. So that's not tremendous numbers, but again, anything not negative is good. So it rose about 1%. That's good. The housing sector continued to show strength in October. We're doing well there. And let me look here. Boom. So, but in the week of November 14th, there were 742,000 new claims for unemployment insurance. So that's an increase of 31,000 from the previous week's level, which again was revised by about 2,000. So unemployment numbers, I can speak to you a little bit academically about that. Those are the numbers being reported. There is this, as those of us in the sociology world know, there is this big number out there that's unreported. Finding out who truly is unemployed is kind of hard to do. That's a metric. I'm not saying ignore it, but don't put that as a hardcore number. No, it's probably always more. It's probably always more. Why? Because certain people fall off after benefits have run their course and they still don't have a job, or they don't report they're looking for a job anymore and they're still unemployed. Those type of things, or they just kind of given up. It's very hard to track. There's a span of error there, but I wouldn't put a lot of credence. The important thing to remember is unemployment is still pretty high, and that still causes some temperament in terms of how I invest money. I'm not saying I'm sticking it under don't stick it under the bed, but are we back to pre-COVID? Absolutely not. I would say some things that would hit hard last week, where the energy sector was hit pretty hard, consumer staples and healthcare. Those things were hit pretty hard for obvious reasons. But again, nothing where I'm seeing anything that's you just dump everything in one and go to the other. I always preach the same as I always do: diversification. So if you've got a diversified portfolio, you've got active financial management, and someone's helping you look at it, then all the better. If you're not doing those things, now's the time, because between 2008 and 2020, everybody was an expert. Everything was going up. Didn't matter. Everybody was chasing those returns. Now times are different. I think volatility is the new norm. Again, brace yourself for the winter. You're going to see a lot of ups and downs. I would try to ignore and temper the political climate right now. It doesn't matter what side of the fence you're on. I'll say this much: whatever you were hearing pre-election, you're going to hear post-election. So don't think that things are going to change dramatically there. I would just say be wary of 24/7 news, and not all of it's news. A lot of it's just editorial stuff. So try and filter through that if you can. If I can help in any way, please reach out. Again, if you want to know more, please sign up for my weekly market updates. Again, a little bit more robustness. Try to keep this short and sweet. Hope it helps, and we'll talk to you next week. See ya.